A new investment firm says it's using artificial intelligence as its investment committee. Our next guest says AI is telling him the S&P will finish the year around 55.75, that the Fed will cut 25 basis points a day, and it will actually skip a cut in November. Joining us now is Doug Clinton, founder and CEO of Intelligent Alpha, and that's a new investment firm designed to capitalize on the abilities of AI. I hope it's better than Siri, Doug. And I was thinking, I mean, we're still not there in terms of sentience and human consciousness and everything. You'd still rather be a human to make most decisions, wouldn't you? Unless is this just some rules-based approach to investing? How does AI work for this?
You know what? You mentioned Siri. We've been testing this for a year, and I don't know how long Apple tested Siri. It feels like maybe not long enough. I think we're starting to see not necessarily sentience, but there is intelligence behind the decisions that we see AI making as an investor. We have to give it some guidance, and we have to give it some certain data, some certain philosophies, how to think about the world as an investor. But once you give it that, it's pretty good at then creating these portfolios, and then we update those portfolios over time. And the tests that we've done have made us very optimistic.
What if it's garbage in, garbage out, though? Yeah. What if your assessments of things aren't accurate? Because we've seen how that happens when AI uses it in other places.
It is, and I think that, again, I go back to our testing. We've tested various data sources that we put in and out. Some data is not useful, and I think some of the other approaches to using AI in an investment context, most of them are more traditional machine learning based. It's very noisy data. You're looking for signal and noise, and I think they haven't done as well as maybe some people would hope. What we're seeing in our testing and now launching these products is that if you can get good data and you can combine that with a good instruction set, a good philosophy about how to think about the world as an investor for the AI, these new large language models, that seems to be more effective.
Can it take some of the emotion out? Or sometimes I think everything about investing is either fear or greed. So if you got out of that, I'm not sure how predictive it would be.
I think that's one of AI's superpowers, not just in investing, but just in general, is that it's actually just not human. And by not being human, it doesn't get susceptible to these emotional swings. You see your portfolio go up a bunch one day, you see it go down another day, it makes you make bad decisions. AI just doesn't do that. We've seen that in our testing. And we're excited today because we're launching not just the company, but our first fund built on this process, built on our AI investment committee called the Intelligent Livermore ETF. The ticker is LIVR. We're launching it here on the NASDAQ. And one of the features is it does pull out some of that emotional issue that we see other investors sometimes.
I think he jumped off a roof.
I was going to say Jesse Livermore did
when he was penniless. He lost all his money and he killed himself.
You know, we actually are writing a little bit about why we called it Livermore. So first of all, he was one of the first great Wall Street traders. We're launching as one of the first firms to use large language AI models to invest. But he learned a lot of lessons that he forgot.
No, he did.
And AI doesn't forget them. I think that's the important thing, and we don't want to forget them either.
No, but some of the most accurate and most important laws you can, Confessions of a Stock Operator, whatever it was called, right. You can learn it there because the market will do everything it can to take as few people along as possible. It's diabolical that way.
Would AI be able to, I just think about sometimes when it's momentum trading, right? Like if you're very logical, you're Dr. Spock or something, you would not.
The baby guy?
Not the baby guy, the captain's
Mr. Spock?
Mr. Spock, sorry.
Okay.
The logical Mr. Spock. He would not necessarily make sense of some of the euphoria trades that happen as they're happening. And I don't want to say NVIDIA because NVIDIA has the numbers to back it up. But we've seen other euphorias. Let's go back to the 1990s with the dot-com bubble. You wouldn't necessarily see that. It doesn't make sense because it is emotional. Right. Would you just steer clear of any of those things? So you miss it on the way up and you miss it on the way down?
What I think is interesting about AI for this use case, large language models, they do have the ability to incorporate some qualitative elements to it. So they do separate emotion, but they also understand, I think, the context of companies beyond just the numbers. So again, it's not just quantitative. And even in our current portfolio for Livermore, one of the top picks is Meta, so an AI company. But what AI has said to us, what our committee has said is it's not just about the numbers, it's also that Meta is one of the few companies that has actually seen a benefit from AI in its numbers. It's seeing it through better ads, it's seeing it through better engagement on Reels and Feed. And so the AI can actually see things beyond just what's happening with the numbers and say, hey, this company kind of fits this paradigm for this reason from a qualitative.
But it has to have the numbers there to back it up.
It needs numbers, but also because it has such a vast array of training data where we're relying on these models like GPT, like Gemini, it does have a broader understanding of the world. You know, anything that's on the internet, these models basically have an understanding of, and so it can pull in that information as well.